This is a continuation of our demonstration of how business transaction runs through the asset equals liability plus equity talk. So in our previous uh, video, we talked about how transaction will increase or decrease assets, liabilities, equities, and the different combination that might take place. For example, an asset might increase and another asset decrease, or they increase on both sides of the equation or decrease on both sides of the equation. Now that we finished our transaction, what we can do is to use this information to create our base financial statements. We always have to start with our income statement or our profit and loss statement, or sometimes referred to as our P&L statement. To get that, we simply go to our revenue and expenses. Now, again, let me emphasize that dividends is not an expense. So here's my revenue, as you can see. And so what I can do is I can use that to build my income statement. Please note revenue is $400, wage expense is $700, fuel expense is $100. So my income statement, here I am, here's my revenue, 4,000, wage expense, 700, fuel expense, 100, total expense, the sum of these two, 800, and thus net income, which is revenue minus all my expenses for this period of time, is 3,200. A couple of things I'd like to point out about this. Number one, notice how the expenses, even though they reduce my retained earnings, for presentation purposes, they're not in negative. Okay. Why? Because readers will know that expenses subtract from revenue to get to net income. Once I have that net income, I can build my statement of retained earnings. So this net income flows through to net income on my statement of retained earnings. So you can see actually net income shows up on two separate financial statements, my income statement and my statement of retained earnings. And let me re-emphasize, these are three separate financial statements. They are not embedded in one another. In our example, we did not have any beginning retained earnings since this is the first month that the company has existed. So my beginning retained earnings is 0. The statement of retained earning only has 4 components: beginning retained earnings, net income for that period, dividends paid in that period, and then ending retained earnings. So in my case, I have beginning retained earnings of 0, net income, and then dividends. And dividends again came from here. Thus, 320 plus 3,200 minus 800 gives us ending retained earnings of 2,400, which flows through to my balance sheet. So as you can see from this, ending retained earnings shows up in 2 spots. Shows up on the statement of retained earnings and the balance sheet. To build a balance sheet, what I need to do is to show what is the current balance of all my assets, liabilities, and equity. So in my case, here are my assets. I have 3 of them. Cash of $145,300, accounts receivable or AR of $2,700, equipment of $5,000. And here they all are. Thus, my total asset is $153,000. I do the same for my liabilities. So in my case, I have accounts payable, I have some wage payable, and I have a notes payable. And here they are right here. Now for the equity, there's 2 parts to the equity. There's the retained earnings, which again came from the statement of retained earnings, and there's capital, which came from here in the form of common stock. I added up, total equity is $102,400. I add that to my total liabilities and I get 153,000, which is precisely how much my total assets are. This ends our talk on building financial statements from the accounting equation.